The broadcast is now starting. All attendees are in listen-only mode.
Good morning, traders, and welcome to the Bookmap special event webinar. It's a Pro Trader webinar series here that we have a few times each quarter. And today we have something really special. This is going to be an interview with Dr. Brett Steenbarger and Scott Pulcini. They have a long history, and I think I'll let them kind of elaborate on their credentials and their background. But what we're really going to get here is an insight between a professional trader and a leading industry trader psychologist, and a discussion between the two. And also we have something very unique and special here that Scott is going to show, and I'll have to interrupt during the webinar and get into some of the details on it. There is something in the handouts folder for the this Bookmap MBO bundle indicator that Scott is going to cover. And don't worry, we'll go through it in detail. I will also put Scott's information into the chat here for you if you want to reach out and talk to Scott about some of his educational services. So risk disclaimer: trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And with that, I'll turn it right over to Scott.
How you doing, Bruce? And Dr. Brett?
Doing very well.
Hey there.
So, let me grab this right now before we get going. Let me know when you can see my screen and which screen you see, actually.
Yes, your two daughters.
Perfect. Okay. Yeah, so Bruce, once again, thanks for having myself and Dr. Brett on. This will be interesting. Dr. Brett and I we haven't dove into trading like this for a number of years. Should be fun, but you know, I'm going to give a brief history. I've gone over it enough in the prior webinars, but it's worth noting again just to hear how Dr. Brett and I met, and what he did early in my trading career, and then I'll start to get into some examples. But I started trading in 2001, right after 9/11, and literally was losing money every day for almost 2 months. Was about to get fired. 9/11 happened, and I went over to German DAX to figure out, just to get some experience, and I figured out some nuances there. And then when the stock indices futures opened up back up, I started to apply what I learned there in the S&P, and then all of a sudden I went from losing every day to making millions of dollars over a 3-4 year period. And right in the middle of that, Dr. Brett came into our firm, and he was our trading psychologist. So it's kind of like, I don't know if you're familiar with that show Billions on HBO. It's kind of like that. I mean, he was there for traders that were struggling, or I'll let him tell you a little more about that. But traders that were struggling, or losing their minds, things like that, or just he was very helpful. And then he ended up, he was writing a book, and he asked if he can sit behind me when he was writing Enhancing Trader Performance. He asked if he can sit behind me and watch me trade, just to kind of learn what I looked at, or how I reacted, and what made me great at the time. Again, like I always tell in the story, is I was $1 million trader, right? I was more of a rags to riches to rags type trader, where I made millions of dollars, but then when the algorithms and the low volatility around 2005, 2006 started to take hold, I couldn't make a dime. I went from making millions to couldn't make a dollar, to then losing, and then parting ways with my firm, and then being a vagabond for years, trying to going from firm to firm, trying to figure out a new way to trade that I had a gift at, and I was just never, I just never could ever duplicate anything near what I did in those days I was scalping. That was my gift, and that gift went away. And a lot of traders can attest to the same thing in certain ways. So I was basically rudderless, and even had to get out of the business for a few years in 2013. until, of course, Dr. Brett showed me Bookmap. And the minute I saw it, I knew I was back. I knew that, just like I knew when I was going to make, you know, millions of dollars when I bet the owner of my firm that I would be the #1 trader in 2002, after losing every day for the first 2 months. The same thing happened when I saw Bookmap. As soon as I saw it, I knew this was the missing piece of trading that I was longing for. So then fast forward today, I've been using this very successfully, and it just keeps getting better and better and better. And I'll show you some new things that you guys are introducing, which is just absolutely incredible. But I'll let Dr. Brett. You gotta be kidding me. Hello?
Yes.
Yeah, you're there.
Okay. Yeah, let me just jump in and make a little comment about what
I'm sorry,
Scott said.
computer, all my screens just went. All my screens just went black. Sorry, that's why you said you got to be kidding me.
No,
But
it's
I'm back.
It's back.
I'm back.
It's back. Yeah.
Take away, Dr. Brett.
Okay, that sounds good. Yeah, just a quick comment on what you were saying, Scott. There's one sentence you said that I'll disagree with. You said that your gift went away. And the gift doesn't go away. The gift is a set of talents that you have, that successful traders have, and different traders have different gifts. What was happening back in Chicago in that 2001, 2002, and after period was that you had information close to the market that allowed you to utilize your gift. And
Right.
so you could see in real time who was doing what. And you were trading very quick time frames, very close to the market. There were times, Scott, I don't know if you remember, there were times where you were trading in and out and in and out and in and out and in and out on the S&P. And I would mention something that the S&P had done for the day, like how it closed for the day. And you weren't even following that. You didn't even know that the S&P was up a lot or down a lot necessarily, because you were so focused tick by tick. Who's in the market? What are they doing? When
Right,
the
exactly.
algorithms took, you remember that? When the algorithms took over a course, there was all the spoofing, and it became next to impossible to figure out who was doing what. And that's what interested me in the Bookmap information, because here you can actually see on the screen the historical order flow to tell you which bids and offers are real and which price levels are significant, which is the exact same information you were using back when. So I think it's a real potential source of edge, not only for you, but for the traders who are attending today.
Right, absolutely. And you know, when I tell the story, you know, about my scalping days, I mean, there are days that, like you were saying, I wouldn't even have a chart up. I was just watching straight order flow. I wouldn't know one thing about, you know, breakouts, or, you know, if we were in a range or anything like that. I would literally bring up my TT screen. That was the front end I used at the time, software, and look at the ladder and watch the orders come in. And that's how I would make my decisions. And that's why, because that's still how, you know, after learning about Bookmap, that's how I make my decisions again, because now, you know, I've learned a lot as far as the technical side since then, using bar charts and everything else. But, you know, like, again, I'm not you know, I'm not a gifted trader just by looking at a bar chart technically, and most aren't, because, you know, things don't always work. But then when you tie in the real-time volume, that's when you get that's when you start to understand what's really happening, you know, what the big money is really doing in the market, and that's who you want to follow, right? And again, you know, all these stories that I tell, or all these examples I give, is because I used to be the big money, so I know what works, what doesn't work, things like that. So you're exactly right, Brett.
Good, good, good.
Okay, so shockingly, just like happened a couple webinars ago, I don't know if it's something with the GoToWebinar, but it knocks out all of my examples. So at least I have them backed up a little bit here, but I'll be going. It's going to probably take me, a second or two to bring up each individual one. But I apologize. I don't know. There's something with GoToWebinar that does something to my computer. But anyway, do you want to? How do you want to do this, Bruce? Do you want me to just get into some examples, or you want to talk more about our history together? Or
Well, I mean, I think maybe you can kind of build those images back together again, and let's just go through that and what you were looking at, and just the relationship between you two. I recall reading Brett's book, Enhancing Trader Performance. I don't know, when was it released? Was it 2006 or 2003, something like that? And then reading about you as well, and then here you guys are. Yeah, go through and discuss like the processes, that what you were thinking about, and then the insights from Brett. And I don't know if Brett, you wanted to talk about meeting Scott and what you had come across, and the time spent, etc.
Yeah. I'll just mention one thing real quickly, and let's get to the charts and the real data. If you look at the same information as everyone else, you will see the same things that other people see, and you will trade the way other people trade. The traders I work with who are successful are looking at new and different information, or they're looking at existing information in new and different ways. We have to see markets differently to trade them differently. Otherwise, we're going to have consensus results, not outstanding results.
right, exactly. And that's again, I can't stress it enough. That's what this program, the software Bookmap gives you. It gives you advantages over 99% of the traders, would be my guess, that don't have access to this or don't know how to use it and are just looking at bar charts. Again, if you're looking at just bar charts or a couple different indicators, you're just not seeing the whole picture. You're not really seeing what's going on, right? You're not. The biggest thing Bookmap does for me is it helps me understand, even when I'm wrong, I know most of the time I know why I'm wrong, right? You're seeing what the big players are doing, and it explains it instead of just looking at a chart. And then, I've given this example before where it keeps bouncing off VWAP, and then one time, then the next time you try to play a bounce off VWAP and it rips right through. Well, I want to know why that time it ripped through, not just, oh, okay, that's just trading percentages, which it is, right? Because nothing is 100%. But I want to know reasons why it didn't work, right? And that's what Bookmap tells you, especially with the liquidity, the visible liquidity that you can see, and even more so with this with this new indicator that they have, you can see why areas on your charts don't work, things like that. So I'm gonna be again. It's gonna take me about a minute or two to get these back up. Brett, if you want to maybe just talk about a little bit about when you wrote the book and why you decided it. I mean, because there were some pretty successful traders. I mean, granted, I was the #1 trader for a couple years there, but why did you choose me to put in your book and sit behind? I mean, I know the other traders in your book as well, but why did you sit behind me and want to see what I was doing? Why did that intrigue you versus the other traders there?
Well, it intrigued me because it was clear to me that it wasn't that you were playing the game better than other traders. It was that you were playing a different game. And I see that with successful portfolio managers and traders. In some ways, they're playing a different game. They're not just playing the same old game better than other people. In this case, like you were saying, you wouldn't even have charts of the market up. You were trading from order flow and able to make very, very quick decisions about who's buying, who's selling, what levels will hold, and so forth. Not everyone has those quick thinking, pattern recognition skills, but some people have it as their gift, to use your word, Scott. And that's what intrigued me, was someone who had a particular cognitive gift, a gift in terms of processing information, who was using it very successfully. A huge part of your development, I'm speaking now to the people attending the webinar, a huge part of your development is figuring out what your gifts are. Where are your strengths, not only personality-wise, but your information processing strengths? What do you see well? What do you visualize well? What do you think well? How do you make sense of the world in unique and distinctive ways? If you can figure out your strengths as a thinker, your cognitive strengths, that will tell you what your strengths will be as a trader.
Right, and that's what I stress too. When I go through these examples, when I'm talking about what I look at, what I do, how I interpret the markets, it's not for traders to copy. Traders have to figure out what works for them, and then come up with different strategies using Bookmap with their areas and the things they look at. So it's not to trade like me. Even when I do my mentoring with my students, I explain to them, you have to figure out what works for you, and then you implement the real-time volume to figure out if the areas that you are looking at are relevant. So that's a big thing that I stress. If you want to be a successful trader, you cannot copy other traders, right? I mean, you can try to find the same levels as them, but you have to come up with something that makes sense to you, right? So when I was a scalper, that made sense to me, like you're saying, Dr. Brett. But and now the way I look at the markets now with the Bookmap, that makes sense to me. So everyone has to come up with their own ideas, especially if you're using bar charts and implementing the real-time volume. All right, so I'm going to try to get back on track here. I cannot believe this happened again, Bruce. I mean, literally while I'm talking, all my charts disappear. So now I'm flailing here. But so I'm going to briefly go through, just very briefly, because all the other webinars I've done are kind of redundant if I keep going over the same stuff, even though it's obviously very relevant. But I'm just going to go because I want to try to get to the new stuff here quickly. So the first couple webinars I've done, and how I've learned to use Bookmap is looking at how markets respond to resting liquidity in the book, right? So resting, for those of you that are new to Bookmap that don't know, so that this orange red-ish, again, I'm colorblind, and that's why my the defaults on Bookmap are green and red, I believe, and I've changed it to blue and red just because I can't tell the difference, but that's why mine are blue. And so if I'm wrong on colors, I apologize, but this liquidity lines are basically resting orders in the book. That you can also see on the on the dome, but when you just look at the dome, it's fleeting, right? So anyone that tells you they can make money just trading off the dome orders is either lying or is holy. That's my opinion, right? You got to remember, this is how I used to trade. I used to trade off of the dome, and if I can't make sense of it, I have very fast processing skills, as Dr. Brett can attest. If I can't make sense of it, there's not many people in the world, I don't think, that can make sense of it. So my point is, this information is what's in the book, but it's a lot easier to discern looking at it here. And it makes a lot more sense when you take the resting liquidity and then you add in what's really happening with the market orders, right? So what you see in these bubbles is just basically orders that are market orders, right? So we call them aggressive buyers, aggressive sellers, meaning they're not waiting to get filled. Like these orders are waiting to get filled. They're passive. They're just sitting in the book waiting. When you see the bubbles, those are the active, aggressive sellers in the red, buyers in the blue, right? So when you can kind of meld everything together is in these levels where there's resting liquidity, and then see how the sellers are trying to push it through, and then they fail, try to push it through, and then they fail. And then you tie that into a level you're looking at in a chart that's important to you. That's when you get high percentage trades, right? And I always stress that you're wanting, when you're taking these trades, you're not going to be very successful, and you're not going to be around very long, in my opinion, especially with the algorithms that dominate in the marketplace now, trying to take 1-to-1 on your trades, meaning you're risking 1 to make 1, or even 2-to-1, in my opinion. So you want to find areas in your chart that are validated by the volume where you can risk a little to make multiples, right? So you're risking, 1 to make 5, 1 to make 10. That's how successful traders make money. Again, unless you can write programs that are ultra fast, most of the retail traders have to be taking multiples on their trades. So this is just a basic, what I've talked about in the past, where, market comes down to resting liquidity right here. And it also gravitated to the high liquidity, which I'll go over here in a second, which I talked about in the last webinar, which just shockingly almost always does, and I'll explain why. It's not coincidence, but so it comes down here, they try to sell through, they lose, comes back down here again, they try to sell again, lose again. I mean, they don't push it lower, and then you see liquidity put back in, right? So this right here, in my eyes and in actuality, is a great trade, because they tried to push it through, they lost, they tried again, lost again, and liquidity comes back in. So now you can kind of lean on liquidity, and the minute you start seeing the buying, you can get long, put a stop below here, and ride it up until you see a reason to get out, right? And that's the other thing Dr. Brett, I'm sure, sees all the time is one of my biggest, and I'll even show you an example later, it's one of my biggest faults is getting out just because you have a profit, right? You want to get out just like you get in. You want to have a reason that you're getting out, not just because you see your P&L ripping higher, right? So again, when you're getting in, you have to have a reason to get in. When you're getting out, you want to have a reason to get out. And it could be whatever reason, again, makes sense to you. It could be, say it came up to this liquidity right here and they tried to buy through, and then you start to see some sellers. That's a reason to get out. But there's many reasons to get out. But my point is, you want to use this information both ways. You don't just want to use it for entries. You want to use it for exits as well. So that's the basic. The first thing, the first few webinars that I did, what I talked about, which this alone will make you a much better trader than just obviously looking at bar charts, right? And then,
Scott, can I jump in? Scott?
Absolutely.
Yeah, so this rings true to me in terms of the edges I'm seeing from the traders I'm working with, both the active portfolio managers and the active prop traders. What you're looking at on that one chart is an occasion where selling comes in and selling comes in and selling comes in. You can see the selling, you can see the levels, and at some point the sellers cannot push the market lower. Those sellers are trapped. When we get buying coming in, because the market can't go any lower, those sellers have to cover, they end up puking, and that fuels the movement higher. And conversely, we get occasions where the buyers come in, the buyers come in, the buyers come in, and can't push the market higher. They become trapped. Some of the best short-term edges in the market is seeing clearly where buyers and sellers are trapped and getting ahead of them for the next move as they have to exit their positions.
Are you there, Scott?
Yeah, I'm sorry. I put myself on mute when he was talking. And exactly, that's exactly right. And so the next thing I'm going to cover is what I talked about on my last webinar. And Dr. Brett, since he was in his early King Street days, he's worked with many hedge funds, just, big money traders, and I'm sure he can attest to what I mentioned last time and what I'm going to talk about again today briefly. And the reason I know this, well, let me show you some examples first. And again, I'm sorry if I'm kind of scrambled here because I've had to bring everything up last second. But what I talked about last time is a good way, when the market opens, one, you want to have a plan, right? You want to have an idea of how you want to trade the market that day based on, whatever you look at, right? So the thing that I do is, on certain days, it's screaming what the market is going to do, right? So this is an example of, it helps you build your thesis for the day. So this is an example of the QQQ, which is, I highly recommend, that's the other thing I talk about too, for even guys that just trade futures, you're doing yourself a disservice by not having the ETFs up, right? Because you can glean so much more information from what the ETFs are doing with the volume and everything else than just looking at the futures. It's the same with just looking at a bar chart versus having a bar chart and Bookmap, right? So you want to start to look at these ETFs if you're trading these markets, because it gives you information that the regular futures a lot of times don't have, right? So when I bring up in the morning, I'll bring up my charts or the Bookmap, and I'll immediately look at the ETFs right when the market opens, and I want to see where the liquidity comes in, resting liquidity, right? So, which I've talked about before, a novice Bookmap user, and it makes sense, but that's why most things don't make sense in trading. It's usually the opposite. But you look at this and you say, wow, look at all the resting bids here. I think we're going up for the day. I mean, look at all this support, right? This is real-time support. Yes and no, right? So the no is, from my experience, and the reason I say my experience, because I used to do this exact thing when I was a huge trader. I mean, at my height, I can put on 3,000 E-mini S&P contracts, right? So I would load the book in areas that I wanted to get long with bids, right? And then I would wait for my opportune time, and then I would push the market into my own orders, right? So this is exactly what's happening here in my eyes, where you get this big money that puts in their orders right at the open, and then they want to get filled here. So again, this big money can't just come in and buy millions of contracts, because hundreds of thousands or millions of contracts, because they'll run the market right off the screen. So they have to do it in a more covert way, where they wait for their moment, and then they push the market into their orders. Then they get long, or they get out of their short position, whatever the reason is. And then when you see it kind of struggling after it trades through here and all these big traders got filled, then you start to see some buying. That's when you can get long, right? So that's what I'm trying to explain is this is very key in knowing where the liquidity is in the book. Knowing, again, so I look at this chart for this particular day, and my thesis is we're going lower before we go higher, if we go higher, right? So this was the QQQ. This is all the same day. This was the SPY, right? So you had the liquidity here. When you see this is algorithms, right? This is also good to know, which happens a lot, especially in the SPY, where they put it in, pull it, put it in, pull it, put it in, pull it. So you know this stuff isn't relevant for my trading. It's just games being played by the algos. This is relevant. These are orders that have been there since the open. 6:30 my time is 8:30 Central. I'm in Arizona. Where these orders want to get filled. And when you start seeing them the same look in every market, then you have a very good idea of what's going to happen that day. Then you look for areas to get short to run into these orders. And then you can kind of judge when it gets here, whether you're going to get out or let it ride or things like that. So that's the SPY. This is the VIX, which obviously moves opposite. If the markets go down, usually VIX rises. So you can see all the orders are above in the VIX. This is the VXX, the ETF. But again, everything's aligned, right? So you can come up with a very good thesis of, I want to be short today until this happens, right? So then lo and behold, turns around, this is QQQ, takes out this, takes out this, takes out this, takes out this, takes out this. Hey, look at that. The very last liquidity level got filled, and then we rally, right? So basically, whoever these guys were, one firm, multiple firms, they got what they wanted. They pushed it down into their orders. Now they're either long or they got out other shorts, whatever the reason may be. It doesn't matter what the reason is. You know that the market was going to gravitate to this liquidity at a very high percentage. Again, nothing in trading is 100%, right? But you are on the right side of the market. If you look at all these different markets and you see this liquidity resting, you know where the market's going to probably end up. Again, I say 80% of the time. That's probably not accurate. I mean, in my opinion, what I've seen so far with this, it's been about 80%. But again, nothing's 100%. The point is, you're on the right side of the market. You have a very good indication on what's going to happen, right? So that was the Qs. This was.
Can I just jump in real quickly?
Sure.
Because this pertains to the psychology of the marketplace itself. What you're seeing here are the intentions of large market participants. when they have resting orders that stay in the book, that's their intention. These aren't things that they're putting on and pulling and putting on and pulling out of the book. These are levels where they want to get involved, and you can see that on the screen, which helps you then with your decision making.
Right, exactly, and that's exactly what I say. I mean, again, Brett, you've worked with the big funds. I mean, what would happen if a huge trader at a big fund just turned around and wanted to get long and then just decided they wanted to chase the market and at any cost? Would he be in a little bit of hot water that he didn't wait for VWAP or wait for, you know what I mean? I mean, they obviously just don't dump their orders in the market. They have to be more discreet in getting.
That's right, because they would just blow out the bid offer spread, and they'd end up chasing bad prices. Example I use when I after I was in Chicago, when I first joined Tudor, the hedge fund in Connecticut, the minimum portfolio size for an established trader was $200 million. And so they had so much, that was the minimum. So they had so much capital, each portfolio manager has so much capital that they have to execute the orders over time. And they have to try to get good prices for those orders. And that's what you see in the order book.
Right, exactly. So again, if you have an idea of where the big money is, that's what you want, that's how you want to trade. And then you want to see how it trades when it gets to those orders, right? So this was the SPY that I showed. These kind of lightened up because this is all relative. So there was monster, once this, you know, when the market opened, these were really bright orange, but then when this came in right around 9:30 my time, then this made these lighter, because that's another great thing to figure out. When you can just glance at it and know relatively, hey, is this volume more than this volume, more than this volume, instead of trying to figure it out from the order book, right? So regardless, when this came in, this lightened these up, but you can see these got filled, this area got filled, and then this area got filled, and once this got filled, lo and behold, gone. And then of course we rallied, you know, that day, or this is right at the close. So what I want to show next is, okay, so now I want to move on to the, I just want to show this quickly. I got to bring it up. But so make no mistakes, right? Nothing is clear 100% of the time in trading, right? You're going to have days that are range, right? Where you pull up the order book and you don't see, you don't see this. It's not as clear, right? And I'm going to show you here. So this is a range day. This was on 419. You bring up, this is the same thing, bring up the Q. Okay, now which way are you leaning? This tells me that this is going to be a range day, right? I'm thinking these might get filled, these might get filled, right? Which way is it going first? Don't know. You can use other means to figure it out. But my point is, don't think that every day is going to be just this layup where you look at the ETFs and look at the futures and see all the liquidity on one side and look at the VIX and you can base a perfect thesis. Most days are going to be like this where you can't make a decision, right? So I'll show you the SPY here too real quick. I'm sorry, all my charts were up until my computer crashed. But I mean, look at this. This is not clear, right? So on days like this, you just lighten up or you back off, go golf, whatever. The point is, that's another misconception out there that great traders make money every day. Great traders do not make money every day. And I actually had this fallacy when I started to trade longer term. And when I mean longer term, I mean like minutes instead of seconds, right? Because when I was at my height, when I was making millions of dollars, I was making money every single day. Like if I had a losing day, I was distraught. And it took me a long time to realize when you're trading more of a swing type trade, whether it be minutes, hours, whatever, you're not going to have winning days every single day. So the days that it's not clear like this, you just want to back off, right? You don't want to be taking stands if you can't figure it out which way you want to trade and have confidence in that, right? The great traders, make a little, lose a little, make a little, lose a little, and then they have these huge outsized days. And Brett, again, I'm sure you can attest to this for your hedge funds too.
Absolutely, Scott. And what really strikes me in what you're showing is that good market information doesn't just tell you which trades to place. Good market information tells you when you shouldn't be trading. And you can wait with patience for the clear setups, and then you can put them on with meaningful size so that you can do quite well.
Right. And I wanted to show this example just to show that everything's not always sunshine and rainbows, right? So it's like there's going to be days you're confused. Those are the days you back off, period. I mean, it's common sense. Most traders, again, it doesn't hit them till after they have a huge losing day in a market like this where they're getting whipsawed. These are the days that the algos love. They are waiting for the retail trader to get in there so they can rip your head off going back and forth, whipsawing you, right? So again, if you can recognize days like this before they happen, you can lighten up, you can back off or whatever. So, so you have all your bullets available to fire at a market that is aligned with everything else. So that's my point there. So now I want to get into the new indicator. Bruce, have there been any questions or anything you want me to cover quickly before I get into the new stuff?
Yeah, there's a list of questions. I'm kind of going through and answering some of them. You've kind of answered them along the way. Guys, I don't know if we're going to have enough time to get through a lot of the questions. Unfortunately, I will put Scott's email into the chat for you. You can reach out to him directly to ask questions. That might be the best way, because like Scott's going to show something unique here and interesting. I think you guys really want to hear. And I don't want to take time away from that. So why don't you just continue on, Scott? I think that might be best.
Okay. Yeah. Again, I've got so many examples, not so many, but it's just of course discombobulated because all my chart shut down. But so what I want to show you is a new indicator that. It's been out for a while, which is even more amazing. It's an MBO indicator. And again, Bruce is going to go over it a little bit after what it is, but I'm just going to give you my, basic common sense breakdown, making it simple, which what you should do with trading, obviously, where this indicator shows you where the stops and where the icebergs are being fired off. So this is only CME data. And the corresponding, so obviously crude's NYMEX, but it trades under the CME, so you can get the data there. And it's only through Rhythmic. Again, Bruce will go through all of this, but I just want to go over kind of what this tells you and why it's basically 100% accurate, not 100% accurate from a trading standpoint, as far as knowing that these are stops versus regular orders, these are icebergs versus regular orders, because these orders have certain tags on them when they come through the market. Which tells the exchange. The exchange puts this out whether it's an actual iceberg that's put in or a stop. For just like when you put a stop in the market, that has a certain tag versus a market order, right? So that's how they can disseminate this information. And now they've put it out for the general trader, general public, retail trader, which is game changing, right? So I've talked about since last October when I started doing webinars for Bookmap, how it's the holy grail, right? In my opinion, this is the holiest of holy grails added on to the holy grail, right? When you start to combine this information with the book map, with the resting liquidity, with what you're seeing in the charts, you are now, in my opinion, you are now on a level playing field with the big money, right? Because once I show you this, and I'll have Dr. Brett kind of touch on it, this is information that these quant funds, these big funds have had for years, right? And that's why they never lose. You always hear these, Goldman Sachs made money 198 out of 200 trading days in 2018. Just ridiculous. And you're always thinking to yourself, like, it's either fixed or they have information that the general public doesn't have, which up until a few years ago is exactly the case as far as I'm concerned. And again, we can get in a little bit with Dr. Brett, but back in the day, they used to actually have counterparty information where you would be able to see exactly who you traded with. For a smaller trader, it's not that big of a deal, but when you're a big trader like me at the time when I was trading 1,000 lots, I would be able, if I jump up and take an offer, I would be able to see who that offer was as far as what house, right? So back then I had a nemesis at another firm that we would go head to head every day. It was like literally like a poker game. And I can see when I would buy 1,000, I can see 900 of them were this one firm. That's huge information to have when you're making your decisions, right? If I jump on my buy 900 and I see it's like Merrill Lynch that I rarely see in the market, that gives me pause, like, oh shit, I might be wrong here, pardon my language. But it's just an advantage to know who you're trading with, right? So this is kind of like that kind of information that you can use for your trading. So let me go over here what this is. So this information shows stop runs and icebergs. So the icebergs are blue, stop runs are orange or red or whatever color this is, right? So when I say bid icebergs, so when you see this, the line go higher, that means there's resting bid orders in the book hidden, right? So with icebergs, for those of you who don't know what icebergs are, it's like a hidden order where you just have to display a certain percentage, and I don't know the exact percentage, but you say you have to put, say you have a 100-lot iceberg that you want to put in the book. All you have to display is 10 lots of that 100, and then you got another 90 behind it that they have to sell through to have it go lower. So it's kind of like this little hidden game where there's a lot of different strategies to why people use icebergs. One of the reasons is a lot of times firms don't want to show how much they really have to get off, right? They don't want to show I need to buy 20,000 contracts here, so they put in 500, and behind it is 19,500, which is significant information if the market keeps plowing into that order and it looks like 500 and the market keeps spinning at that price, and all when you're watching it on the order book, you don't know what the hell's going on. When you see it on here, then you're like, oh, okay, well, that's it. There was a huge iceberg order there, which affects the market, right? So if you're, just think of it, if you're a big player and you want to sell through this area, and you start selling the shit out of it, you just keep selling, and the thing's not going lower. All you see there is 100, but you just sold 2,000 and it didn't move lower. What's going on, right? This is what's going on. There are resting hidden iceberg orders, below, I want to say below the market, like hidden orders when I say below. So the blue shows you where they're basically taking them. So these are passive icebergs taking the sellers. So these are aggressive sellers selling into the passive buyers, the passive icebergs, right? So this is one type of passive buyer where you can see this liquidity. This is a different type of passive buyer where you can't see it, but you can see it with this information, which is huge, right? So that's that. The orange is are stops. So it's a specific order. Everyone knows what a stop is because most traders have to trade with stops to get the hell out of their position if they're wrong, right? So what this is telling you is these are big stop runs that are firing off, right? So when I was talking about earlier, the aggressive orders, the aggressive market orders, yeah, these are aggressive market orders, but they're stops, right? So why is that important information? Because when I see stops, I'm thinking the uninformed retail trader that doesn't know what the hell they're doing. They're all puking at the same time. This is not big money, right? So why it's important, if you see stop runs, there's most of the time you're not seeing, that's not big money. That's not the player, the houses, the firms, the paper we call it paper. I'll refer to it from now on. That's not paper selling, right? So this market most likely is going, not most likely, I mean, a high percentage of the time is going, there's nothing behind the stop run, right? So these aren't legitimate sellers. These are guys that are puking out of their position. That is incredible information to know when you're say you want to get long or you're looking to get short and you see this, you're like, yeah, look at these, again, if you're just using Bookmap, you see this, you're like, yeah, they're pounding this. But when you say here, like, oh wait, that's a stop run. That's not informed traders. That's the clown retail trader, which I am at this point now too. So my point, I'm not making fun of anyone. I'm just telling you this is uninformed money. Then when you combine a stop run with what the smart money is doing, they're actually buying here passively. What does that tell you? That tells you that this market is probably, most likely, high percentage, not going to go lower at this point in time. So that is incredible information. So you can see here with this graph, again, I just want to explain this. So you can see it here when it's happening in real time. This was more over here, these geared chart thing here, but this shows you here, but you can see over here what the quantity was, right? So this first stop run here, the stop run here was about, this is the orange or red, it was over 200. The icebergs were, you go to the left here, you can see the blue, it was about 250. And again, and don't get confused, oh, well, I don't think 200 is a lot of size. I don't think that's not enough to move this type of market. Just let the relativeness dictate what it means, right? So when you start seeing huge spikes that haven't been seen all day, right? So this is the biggest buy iceberg of the day. This is the second biggest iceberg. This is the biggest. This is the second. But look back. Where do you see anything like that You don't, right? So this tells you, I don't care what size it is, relatively, this was a lot of buy orders for this market at this time, right? So that's really important to know, where you can just wait for these outsized icebergs to fire off, and then that's where you can, you can build a playbook on that trade alone. It doesn't even have to have anything to do with your charts. So that's what this information is telling you. Hopefully that's clear. Bruce again is going to go over a little bit at the end, and he's got that printout in the, if you go to the handout, you click on that. There's another link that kind of shows you some examples as well besides mine. That'll be very helpful. But again, I'm available too. All my information's in there to help you guys, navigate through this. But it's pretty straightforward.
Scott, can I jump in?
Yeah, please do, so I can get my other charts going.
Yeah, my audio went off for a minute there. I wasn't sure what was going on, but think of it this way: when you can see the icebergs, when you can see the sell stop runs, it's like seeing the other players at the poker table. The smart ones, the not so smart ones. These are tells that you see around the poker table to read the intentions of the participants. And by seeing the intentions of the more sophisticated and less sophisticated participants, you can make more educated trading decisions.
Oh, by far, absolutely more. Again, nothing is 100%, right? And I'm going to show you some examples here on when the icebergs were actually wrong, going the other way, but I can show you how you can utilize that as information as well, right? So why I showed you this example was because, when you're just using Bookmap, this is the same area, right? So you're using the resting liquidity. This looks good. They can't get it through, just like what I showed earlier, right? But then when you add in your stop information, right? Now you have this information that you already know, anyone who's been already using Bookmap. Now you tie in the the stops that are fake money, in my opinion, that's not going to continue to move most of the time, or a high percentage of the time. And then you add in icebergs. So now you have resting liquidity that's failing at. There's icebergs there. The big money is buying here with icebergs. I mean, you don't get a better signals for trade as far as, high percentage trading and risk reward, right? Because if you get long here, the minute you see this start to buy, say you wanted to get in right away, all you got to do is buy when you see the blue and put your stop below the red. It's literally that simple as far as controlling your risk, right? Because if this thing turns around, which it did, but it didn't get through here again, right? So if this thing turns around and sells off and these icebergs are wrong, you're getting out. You're not risking a lot to get in this trade, right? You're risking maybe 20 ticks, which is not a lot in crude these days. But then you catch a huge, you catch a 40 tick move. So the point is, you can gauge your risk reward by not just the resting liquidity, but the iceberg orders. So hopefully that's clear. As I get in, I'll give a couple more examples, and I'll show you. It might be more clear. Let me see here. Okay, so this is the NASDAQ from 413 so you can see here. This is stops. This is the opposite icebergs, right? So this means when you see it going lower, that means paper, again, I'm referring to paper as big money. Paper is selling. It's a bear iceberg, right? So you get a stop run coupled with the bear iceberg. Lo and behold, it's a top, right? So you had actual selling. So this is also pretty interesting, where you see buy stops firing off, but you see red. There's something amiss here, meaning the big money is aggressively selling here too. So it should be blue. And what I'm saying is, if you see stop runs, most of the time you're going to see them, it's a buy stop run because this is going higher, this is going up. You would see blue here. Not only do you see the red aggressive sellers, now you also see that the hidden icebergs are selling too. That turned out to be a top. Comes back, tests that area, doesn't get through, fails, right? So even if you don't get aggressive right here, you can say, okay, I'm going to wait for a retest and see what happens, then I'm going to get in, right? Perfect trade here. Same thing happens here. You get another stop run, meaning the uninformed trader is puking out. Was a top. I mean, it wasn't really an iceberg here, but there was just telling you that, is this buying real, or is it real? Is it big money, or is it the uninformed trader? That tells me, okay, be aware that if I want to get long, I'm not, this is not what I want to see. I want to see the big money coming into the market. And lo and behold, it stops pretty much where it did before, right here, right? Turns around, sells off. Now I'll get into this in a second. So I know some traders are, and this is where paper was wrong. And I'm gonna show you this here in an example in a second, where it came down and then now you have some buy icebergs here and it failed, right? So again, this is nothing is 100% in these in trading, but now that you know the area that traded, that failed, that's good information. So I'll show you this a little closer up here in a second. But then again, you have another stop run. You have a little bit of icebergs, but just the uninformed trader tries, this is not real buying. Once again, into resting liquidity, fails again. So again, this is telling you what is really happening. This buying at these times is not real buying. It's just stops. It's not the big money that wants to enter the market. That's really good information to know. And then here, this very first time, this is the biggest of this whole move. This was, and in this area held multiple times, this was the houses getting short or the paper getting short. So for you, those of you looking at this spike, which was the highest buy spike of them all in this example that I have on the chart here, let's see if I can pull it up here, if I have it. Of course I don't. Brett, do you want to chime in on that at all while I pull up this other example?
Yeah, Scott. When we see an iceberg that does not absorb the selling or buying, it tells us something about the market conditions at that time. That too is information. All the iceberg is telling you is what the large market participant is doing and what they are hiding. The question is, do they have enough power to be able to contain the moves that would fill the orders? And as you point out, Scott, sometimes the icebergs get run over. Sometimes orders from the big participants get pulled because they see new participation roaring into the market. And that's what creates some volatility. That's what creates some big moves. So right. It's information too when the icebergs can't contain the selling or buying flows.
Right, exactly. So this is exactly what I was saying, what Dr. Brett was talking about here, where, this was a big iceberg, buy iceberg, meaning they were resting bids or hidden bids that were taking the sell move here, but you can see where this spike, it went right through it, right? So again, nothing is 100% in trading. Paper's not always right, but you have an area now where paper took a stand. That is a significant area, or could be, right? And I'm going to give some examples here in the ES too, where you can see this, right? So they were wrong. So even if you did buy here, first of all, I wouldn't have bought. Again, a lot of these are not, most of these examples are not trades I took because I'm learning the iceberg too. I've only had it for a few weeks, but I go back and I look and I say, okay, this is area. So even if I saw this iceberg, I'm not buying here because I don't see any blue coming in until down here, and that's already through. But you can see here, this comes through here, this rips through here. This is where the iceberg was. It comes up, it tries to buy through that area, fails, boom. So this area is significant. Tries it again, turns around, sells. So I mean, this looks like a small move, but this is 40-point move in the Nasdaq, right? So again, if you wanted to say, okay, this iceberg failed, I want to see what it does when it comes back. The second this fails, meaning they try to buy it, the selling comes back in, I'm short right here, I'm going to write it down to here until I see buying. You would have caught yourself a 20, 30-point move. But why this is significant now is because always remember the areas and take note of these areas where paper was wrong and it stopped. Once it got through here, now look at this. So when it finally did get through where this initial iceberg was, now that could be a long signal. Again, you have to come up with your own ideas after watching this. These are just a few of the ideas that I've come up with so far where it broke through and then lo and behold, look when it came back, look where it held, right in that area, right? So it's like once the paper was right again, or once it got back above this, now that's the age-old adage is support becomes resistance, resistance becomes support. So this was resistance the minute when it blew through here. Now when it came back and they couldn't get it back through this area here, now you can get long, right? So that's what I have right here, now support. So my whole point in this is it is not 100%, and you're going to find areas that paper is wrong, but you can still take advantage of it, is what I'm saying. With this information, this is incredible. So my next example is, let's see if I can, again, sorry that this is so convoluted now, but okay, so this is the E-mini S&P, where this is a really good example, where it comes through resting liquidity, again, meaning visible liquidity in the book, Now look what happens. Huge iceberg spike. It's close to 1,000. And what I've noticed so far, in the E-mini S&P, if you get close to 1,000, that's a lot. That's something to take note of, right? So I see 1,000 icebergs. I see so this is by far the biggest iceberg of the day, right? You can see here, look at the icebergs up until here, boom. Then nothing after that. So that's significant, right? Then you couple that with I'm going to call it dumb money, okay? And I'm the dumb money nowadays too, so don't take offense to it. The dumb money's selling, meaning that's not a sustainable selling, in my opinion. It's not paper selling. That's 513, which is a lot for stops, right? So you got those two combined in this area. That was resting liquidity that you can see. This is a high percentage trade. Again, doesn't mean it's going to be 100%, but you take a trade here, you see buying start to come in, and once it runs away from here, you can put your stop just below here, and you catch almost a 40-point trade here, right? So up in the VWAP, even if you wanted to get up a VWAP, it still is a 30-point trade. So this is a good example of extremes. And again, you're going to have to play with this yourself. With my opinion so far, you get up 800, 1,000 icebergs in the E-mini S&P. That's a lot. That's something you need to take note of, especially if you're running into resting liquidity that's visible. These are all, you got to remember this. These are all areas that 95+% of the traders, retail traders, they do not have this information, right? They don't even have this information, let alone this information. Now, when you combine it, it's incredible. So let me show you what that looked like on a chart. I already showed that. Here we go. So this is what I mean about coming up with your own ideas as far as what you look at in a chart. It could be anything, right? So I'm going to give you a couple different examples here, and I know Dr. Brett's going to like my one here with the tick extreme. But so this was the same area, right? This is this area on a bar chart, right? So first of all, if you're looking at a bar chart, how do you know this is going to be the low? You don't, right? You're just guessing. So what I have here, again, I make trading as simple as possible. I use the VWAP. I use they call this a daily value area, which is 2 standard deviations away from VWAP, which I've learned from SMB Trading. Merritt Black, he's a great resource if you guys want to learn the future side as far as charting and stuff like that, and value areas. But all these lines are the middle. This blue line, I think it's blue or purple, is VWAP. Most people know what that is. Now all you have to do is Google it; it'll be explained. And then these are the standard deviations. So my point is, if you were buying just the standard deviation, the daily value area low, we call it, right here, you were wrong, and then you were finally right, right? So why was this area significant if you don't know anything else? You don't, you're just guessing. You're taking loss, and then you get lucky here as far as bar chart reading, right? So here I have a DVA low here. So the point is, when you can use real-time volume to know, okay, now this DVA low is in conjunction with real-time volume in the book, icebergs going off, stop runs going off, this gives you an incredibly high trade, or high percentage trade. The other thing I want to show here, and Dr. Brett is a big proponent of the tick, which he should be, this was the extreme of the day. This is a little moved over, but this area was this, right? So a lot of times when you see extremes, that's a reversal, right? So if you're just trading bar charts alone, this is a pretty high percentage trade. You got to move in the DVA for the third time. You get a tick extreme. Most traders are going long there. Then when you tie in that extreme with this, it's incredible. It's incredible information. And then one last thing, I'll let Dr. Brett talk a little bit about the tick, because I know he loves the tick. This exact low here was the exact low before this humongous move, right? That's just telling you this is not coincidental, right? This is big money that got long, that was right. My point is, take note of this area when this market comes back down here. You know, again, a bar chart trader has no idea. Yeah, it was a lower low. They might be looking at this, but you know, as a bookmap user, that this low corresponded with some monster volume, huge icebergs. Take note. So when this market eventually comes back down here, take note of this area just from what you learned today. It could be a huge setup, whether it's a long or even if it breaks through, that's information as well, if it breaks through on the downside. So Brett, you want to touch on the tick a little bit, or?
Yeah, Scott. Thanks a lot. So the tick tells you how many stocks in the New York Stock Exchange universe are trading on upticks minus the number trading on downticks at any time. To get a number like negative 1148 means you just have to have massive selling across a broad range of issues. So there's puking. They're selling just about everything. That's a really extreme value. And so when you get some of these extreme tick values and you can't make a new low or you can't hold a new low, that becomes useful information. Other useful information is looking at what sectors of the market are doing while these icebergs are going off, while this negative tick is going on. For instance, at the absolute market low from the recent decline, the low we had in February, we hit 2,200 something in the S&P. Actually, on that day where we made the new low, there were fewer individual stocks making fresh lows on a 1-month basis. In other words, there's puking, lots of selling, but certain sectors, certain shares are holding up. That's useful information when you combine that with what you're seeing in the order flow and what you're seeing with the icebergs.
Yeah, exactly. So again, I give these different examples because and I'm going to show you an actual trade I took. Some traders trade off the tick. Some traders trade off VWAP, standard deviation. Some trade off of, the point is you can utilize the real-time information with anything that you look at and be a much, much higher percentage trader. That's the point, right? Not that my strategy or the way I trade is right versus yours. What is right is what's really happening in the market, and that's what Bookmap tells you. So I'll just go over quickly a couple other examples of the icebergs. I showed that. Okay, so this was actually a good example of everything wrapped up into one. But I already showed this. Is this the one I already showed? Yeah, I already showed this. I'm sorry. Yeah, so this was that area where, you had the icebergs, and then you had stop runs. Oh no, this is a different chart. So quickly, same exact type of look, right? So this is perfect. This shows both ways, right? So here, they try to sell, icebergs buy it, moves up, comes back, lo and behold, holds right there, right? Right here, holds. This is a significant area. That's why, because this is where the icebergs took a stand. This is NQ. So say I see this, it rips up. I'm like, okay, I'm not chasing. I'm going to wait for it to come back and then get long and see if it holds, which it does. Right here, I would get long right here, stop right here. Now I'm long, right? Now, where am I getting out? Okay, say my strategy is I get out when I don't get out until I see a stop run or icebergs. Perfect example. Moves higher. Wait, is this real buying or is this the uninformed trader? Oh, it's a huge stop run. Okay, now I have to pay attention. Doesn't mean you have to get out right away, but you start seeing some selling, you might want to rethink your profit potential and maybe get out. Then you combine, here's an iceberg, here's a selling, resting offers, iceberg, big buying, aggressive buying, right into an iceberg. Hey, look at that. Stop. Down. Comes back. Hey, look at that. That's exactly where the market stopped. Again, a lot of these times, you don't have to be aggressive right here. You can wait for retest, then get short, right? Just to confirm what you're seeing. Stops, retest, goes down. Then here's another example of icebergs wrong. Icebergs tried to buy right here, right through it. So again, just because you see the iceberg doesn't mean you just blindly jump in. I mean, you can do whatever you want. It's your money. If you're aggressive, you can jump in. But when I see icebergs firing off, I want to see them right. I want to see the aggressive buyers come back in. This is straight through. Now this tells me, okay, I can't wait for this area, you know, either I'm going to get short right here, I'll put my stop right here, or I wait and see a retest and see what it does. And you can see it came back. I don't have the rest of the chart here, but short term, it came back right in this area, started to turn around again. So this is a really good example of all, you know, all the different, the stops, the icebergs being right, icebergs being wrong, right? So again, it's just relevant information. Whether they're right or wrong, it's still relevant information. Even if you take a loss, your next winner is going to be 5-1 type of thing, right? And that's what you want with trading.
Scott, can I jump in?
Absolutely.
If you could keep that chart up there.
Yeah.
Yeah. So here's a general rule. It's an approximate rule that I have found helpful. Remember, I mentioned that a lot of the edges we're seeing on the intraday basis are buyers who are trapped who have to sell, sellers who are trapped who have to buy. If you look at the amount of volume that is trapped, that will be proportional to the next move in the other direction. So in the chart you see here, there's a fair amount of buying volume that's trapped. And so the first down move where we see that first iceberg doesn't hold. There's too much buying volume trapped. We need to go lower. So looking at not only who is trapped, the buyers or sellers, but how much is trapped can give us some estimates as to the magnitude of the coming move.
Exactly. Love it. Absolutely.
And by the way, this is real trading psychology, not just a bunch of would-be psychologists telling you to relax and control your emotions. I mean, please. You know, it's like
Exactly.
Yeah, you know what I'm saying.
Oh, I know what you're saying. Dr. Brett had many episodes of me when I was a younger trader of losing my mind and breaking screens and things like that. So luckily I've become a little more mature in my older age, but Dr. Brett's seen it all, which is we were reminiscing last night about it, some of my episodes. But, you know, trading is emotional. It's really emotional if you don't know what's going on. That's what triggers me when I don't know a reason. And I've somehow, some way become so much more calm with this program, and the reason is, that was a joke, because now I know what's going on, right? I get frustrated when I feel like I'm being taken advantage of and I don't know why, meaning when I have a losing trade, when I see what's happening, even when I'm wrong, at least it makes sense to me, right? That is huge. That is a huge leap in trading. Even when you're wrong, as long as you can make sense of it, that's huge, right? Not, hey, this went through VWAP, this bounced off VWAP, this bounced off VWAP, oh, that ripped through VWAP this time. Oh, that's just trading, that's just percentages. Yes, it's percentages, but that, again, I used that example earlier, that's not enough for me. I need to know why, right? And this tells you why, majority of the time. Quickly, I'll do.
That's a great point. If I could just jump in, Scott, that's a great point. Just real quickly, I want to underline that many times the frustration that we feel in trading is because we don't understand what's going on. And we don't understand what's going on because we're not looking at the right things.
Exactly. And that's the key. For me, that is the absolute key. And hopefully some other traders are starting to see something here where they're like, oh my God, this is what I needed this for all these years. So this is an actual trade I took, showing you. So this was crude. So you can see here is some selling, aggressive selling through liquidity. Again, if you're just looking at Bookmap alone, you may say, hey, this might be a short here, right? And it could be, absolutely. But when you tie in icebergs, this move comes down here, you see the buy iceberg. So look right here. This was I didn't take this trade, but look here, comes down. Look at the buy iceberg. At the time, it was the most of the day. Turns around, rips away, right? And I have noticed that crude's been a lot more reliable with the icebergs as far as what I've seen so far. Again, I'm pretty new to it too, 2-3 weeks, but I've already seen the incredible edge it provides. So anyway, this was an iceberg, could have got long, comes down here. You see, this is what I wanted to see, right? Here's the uninformed stop run to the sell side. That's good, telling me this is not real money pushing through this liquidity. These are stops. These are the clowns. And again, I'm one of the clowns. And then you couple that with some iceberg buying, that's a long signal, as long as it can get above. And I didn't take it right away. I kind of waited for a retest. And then when I saw this liquidity come in again, I'm like, okay, I'm golden. I mean, not golden, but I have a very high percentage trade here. I'm willing to risk, you know, down to here. If it can break this at the time was like 20 ticks, 25 ticks or whatever. I didn't think it was that much, but anyway, so I got long here, and then I'll show you what happened. So again, I didn't get out. My usual trading style, as I've learned to become a swing trader, try to become a swing trader, is it's real hard. You know, the minute things starts running my way, a lot of traders, most traders can attest to this. I want to get out for a profit, right? No, I tell myself I'm not getting out until I see something with the same reason I got in, right? So we come up here. This was, you know, a 70 tick move, 80 tick move. You see a stop run to the upside, meaning this isn't real buying in my opinion at the time. Then I see the icebergs taking the orders. Perfect reason, like right here, I kind of jumped the gun. I'm still not a perfect trader, obviously. But then when I started seeing the aggressive selling come in, then I was out, right? And then trying to show you I just want to show you a couple of things here with this trade. Then we can answer some questions. So this was the kind of scrunched together where you can kind of see the entry and exit. So this is where I got long. You see this huge liquidity come in. That's when I was like, okay, this is a really good area. I caught it up, and actually I got out, and then I missed. So it went a little higher, went up to here, and then the icebergs fired off on the downside again. And unfortunately, I was on the golf course, which not unfortunately, that's actually a good thing, but that was a very costly round because this thing turned around and sold off 50 straight ticks down with the same exact setup as I got long in. So the point is, but the thing is, I was proud of this trade because I got out for a reason. I mean, I made almost $2,000 on a 3-lot, which is a great trade, right? So it just goes to show you too, I'm not some, you know, monster trader like I used to be. I'm kind of just like in your boat where, you know, but the thing is, the more confident I get, especially with these tools, that's where I will get bigger and bigger and bigger. And that's exactly what happened when I was at King Street. I started trading 1s and 2s like everybody else, right? And then the more confident I became, then they were 2s and 4s, 4s and 8s. And all of a sudden I was trading 50 and 100, 100 and 200. So don't think that like I was just handed some huge size here, good, jump in the market and see what you can do. I started just like you. The more confidence I got back then, the bigger I got. And this is the exact same thing. So, you know, a few months from now, this is going to be 60, you know, a 30 lot versus a 3 lot, just because the more I see this, the more I know it works, the bigger I'm going to trade. And that's how all traders should ramp up their size. Do you have anything to say about that, Dr. Brett, as far as, you know, gaining confidence? And, you know, I know a lot of these big firms talk about, you know, putting on, when you believe in something, you know, you need to take advantage of it and put on bigger size. Do you have anything about that?
Well, you know, as the folks I work with at SMB talk about, consistency of profitability has to come before size. Consistency comes before magnitude of profitability. And so we work on small size, getting consistent in reading the market. And then once we have that consistency, that's when we can grow the size.
Exactly. And that's exactly what I did. I mean, again, if I can do it, I did it back then, I'm going to do it again. Dr. Brett's been my biggest cheerleader for all these years, just waiting for something to get me back in the game. And, you know, he introduced me to Bookmap, like I said earlier. You know, I'm going to get there again, especially now that I feel that's how, again, I don't get paid to do these webinars. I do it because I'm so grateful to Dr. Brett, Bruce, in introducing me to this program. Like, it makes sense to me again, and I couldn't be more excited. Just quickly, I just want to show you in a bar chart what that looked like. So this is this move here for the bar chart traders, right? A lot of traders trade breakouts, right? So again, this was actually a pretty, at the time it looks great. Like right here, it looks, oh, this is an easy trade, right? This is actually starting to frustrate me because it took over an hour for this to happen, right? But for instance, say you're a bar chart trader, say you like to trade breakouts, right? This is a perfect example of a balance area, meaning back and forth trade, you know, building up energy, and say you like to take breakouts, right? Well, a lot of breakouts go like this and then fail, right? What could have given you the confidence that this was a legitimate breakout? Well, the real-time volume. You knew that this all happened. You knew icebergs took a stand. You saw the liquidity coming back in. The minute you see the big buying as a breakout, you're long, right? Most, 95+% of traders don't have this information. Yes, they take the trade. Yes, they were right, but why were they right? They were right because the real-time volume dictated what was right, not some lines on a chart. And the other thing I want to point out too, kind of like the mini S&P, you notice how this area corresponded, that was right here. It was retested the next day, 4/16, so this was 4/15 was the date that this all happened. You notice, comes back to the exact, that's why I have this alert here, comes back to the exact area, and then the next day opens up. Not that you could predict this move, my point is, there is a reason this happens. This area was relevant. There's something going on here. The point is, when this comes back to this area, take note, right? You knew from your experience of looking at the icebergs and everything else that this was significant here. Let's see what happens when it comes back here. It's going to give you information. If it bounces, gives you information to be long. If it gets through, that's relevant information to be short. So again, there's so many different ways to trade this. You can, the whole reason I show you this stuff is what I look at, but to just show you, you can use multiple different things in what you're already doing and use this to enhance it to a point where you are now a profitable trader. That's all I got. Bruce, a lot of breath here, but any questions for Dr. Brett or I?
Yeah, I mean, I've been just really busy here trying to answer as many questions as I can. There's some questions in general about, some of your, what exactly are you looking for, like for a turnaround? Trading into high liquidity, you see the stop iceberg tracker, you see the stops, you see the icebergs, and then, and then what? When you start to see the buyers start to come in on the other side, right?
Right. So, I mean, again, it depends on what you're comfortable with. If you want to be aggressive and you see this fire off, you can get along right here. But I showed examples where the buyers weren't able to step up and these icebergs were wrong and it ripped right through. For my trading, I need to see some aggressive buyers, meaning blue bubbles, start to come in. Then I know, okay, the buyers are starting to fight back a little bit. I don't want to be getting long just because of an iceberg. I want to see real-time buyers kind of fighting back as well. That's what I personally want to see. You can, again, it's your money. You do whatever you want. If you wanted every time an iceberg fires off, you want to fade, you want to go on that side, you'll probably be a high percentage trader. I just think it's more high of a percentage to be getting long when I see the aggressive volume, meaning the blue bubbles, come in my favor of what I've seen here. So I knew the icebergs were bullish. I want to see some bullish real-time volume, and that's what I saw, and that's why you see my entry right here, because that's right where I saw the buying come in, right? Put your stop
And
under
Scott,
here.
if I could just jump in here, what you're saying is absolutely right. You don't want to necessarily catch the falling knife, but you'll see the blue bubbles come in. If you're looking at that NYSE tick that we talked about, you would see a decrease, the level of downside tick, you're making higher lows. You don't have as many stocks ticking down over time, and then the tick will turn positive. And it's that transition in the tick, which corresponds to those blue bubbles, that tells you not only did you have an iceberg absorbing the selling, now you have initiative buying going on. And because enough volume is trapped, you can afford to wait for that buying and ride it higher.
Exactly. I mean, again, you got to use, I mean, crude does trade off the tick a lot as well, but, ticks for the indices or, E-mini, S&P and NASDAQ as well. But, again, you don't even, that's just extra information that just helps enhance your trading probability. But again, back to the question, I just look for some real time. I know these guys, I know this move here was pretty much fake. I know the big money's taking the orders. I want to see some real time buying come in, and then I'm gone. I don't always have to see resting liquidity. This just help. I should have actually put on more once I saw the balance area breakout, like I showed you. I should have even put on more, right? Because this is one of my signals. But I was long, and again, I'm kind of just learning the icebergs as well, and I don't want to fire and have a huge losing day if I'm not seeing things correctly. So again, this just helped enhance my trade. But that's what I look for.
And one more thing, Scott, so for the futures markets like CL, you won't have an NYSE tick measure because that's the number of stocks ticking up versus down. Right. But what you do have are delta measures, which is the proportion of volume that is being transacted at the market bid price versus the percentage of volume that is lifting offers. And you'll see a transition from hitting bids to now suddenly with those blue bubbles lifting offers. So that acts like an NYSE tick measure. If you go on my Trader Feed blog, it's traderfeed.blogspot.com, you'll see examples of that delta measure and how that has picked up some really nice moves in the ES futures market.
Right, and kind of to what he was saying here. I mean, you see the huge selling. I mean, yeah, it was stops, but you see by the size of the bubbles, that tells you too, right? Then you see some buying. Now look at the difference. Look at the difference between this bubble and this bubble. This just means they're aggressively, the sellers are starting to not be as strong. They try one more time. This is a little more than this, but it's still significantly lower than this. And then you see the buying and then off to the races, right? So again, you use this in conjunction with what you're looking at, what makes sense to you. And it just gives you so much more of an edge than almost everybody that's trading retail wise. Anything else, Bruce?
Well, we've been going an hour and 20 minutes, and I know there was a bit of a delay in the beginning there, and apologize for that, guys, to get Scott kind of up and running and his images back. But let me show you this, guys, and I think this, because there's a lot of questions coming in about this, and if you have particular questions about, you know, like Scott's looking at the, you know, this VWAP, different oh God, what's the word? Standard deviations, etc. Like all of that kind of stuff. I think it's probably better if you just reach out directly to Scott on that. His email is in the chat. Right. I also am putting in here. I forgot. I'm sorry, Dr. Brett. I have his blog link in here as well. So you guys have that in the chat. But if you guys don't mind, I'll take over for just a minute, and this will answer a lot of your questions about this new SI indicator, and then we'll go over any kind of parting thoughts with both of you guys.
Yeah, and again, you know, I went over a lot of stuff. I do mentoring. My website, scottpulcinitrader.com. You can reach me there. I think you have my email as well. If you have questions, just fire some questions to me. We can do mentoring, whatever you want. But I will give this to you right now.
Okay, just a moment here. Okay, all right, can you see my screen?
Yep.
Okay, all right, so let me open up this PDF, and it's in the chat. So you guys, or I'm sorry, the handouts folder, right? So you'll see it in there, and then I'll also go through some of the links here about iceberg detectors. I've been like copying and paste them all into the in the chat here for you guys, so you have all this information. And let me get the PDF as well. Here it is. Okay. All right. So because if I just quickly spend just a few minutes here, I think this will really help you guys, because you know, this is kind of important. This is we haven't even publicly released this yet. Scott and Brett wanted to go over these examples, and we're kind of like not quite ready. We haven't even introduced or, you know, made public the marketplace yet, new marketplace. So anyway, so this is very temporary for now, is my point. All right. This is what you'll need in order to get that MBO bundle with the stop iceberg tracker. You will need a subscription to Bookmap, either Global or Global Plus, and you need the alpha version. I think it works with 7.0 as well, but get the alpha version, 7.1. Then you will also need a separate subscription to Rhythmic data for the CME. Okay, it's CME, Rhythmic, and Bookmap, and the SI indicator. That's what's required here. All the CME instruments, you know, like you can see them listed here. There's the ES, CL, NQ, you know, gold, bonds, notes, all that kind of stuff. It's all here. All right. So that's what's required. Here's the process you can go through. And again, this PDF you can download in the handouts folder. If you click on view, you'll see the handouts folder in there somewhere. Okay, and then put a check mark next to it. All right, so once you subscribe to Bookmap, then, you know, go through this process here. I'll go through it very quickly. Then you'll need to also subscribe to Rhythmic. There's a 14-day trial link here as well. Okay. Then there's the subscription to the MBO bundle here. Okay, this will take you to the marketplace. There's a video to watch as well, and then there's a symbols guide here for all the different symbols from Rhythmic that you'll need us to input. Now, if you once you go through this process and add Bookmap or the MBO indicator to Bookmap, you may need to restart Bookmap. Okay, so just note that, try that before reaching out to us in support and saying it doesn't work. And then there's the article here. This is important because the article here will take you to, okay, and go through all the details here. A lot of you have been asking about what setting is he using, etc. Well, all the settings are explained here, and then there's all sorts of examples of each setting and what they're showing. Okay, so this article should be very helpful for you. It is on our blog. All right.
Bruce, I just want to jump in real quick. The setting for the iceberg and the stops, I use the exponential. They have exponential and reset. I didn't really get into that. You can learn that, but personally, I'm using the exponential. That's what you're looking at on my charts.
Right. Yeah. Thanks for telling that, Scott. If you guys need further support, reach out to us at support@bookmap.com. And as both Scott and Brett had described here in the article, we go through and say, look, this is not a red light, green light system. Okay, what it's showing you is just more transparency, and that's undeniable. I mean, this emphatically shows, we know this is due to the market by order data from the CME, that we can now show with 100% surety, we know that these are stops, and we know that these are icebergs, and that's that. Okay, it's all in the article, and there's I'll show you links here you can look up MBO CME data. Just do Google search for CME and MBO, etc. All right, and yeah, just read the risk disclaimer here as well about.
Can I just jump in? Excuse me. Can I just jump in real quickly? Unfortunately, I have a 12:30 Eastern commitment, and I'm going to have to take off. But I want to thank you guys. I want to thank you, Scott, for having me be part of this. It's really interesting, really exciting to see different data used in different ways and ways of putting that together to develop new edges. And I look forward to interacting with traders. My email address is on the Trader Feed blog site. Thank you.
Thanks so much, Brett. It was good to get the band back together again. It was awesome.
There you go.
Yeah, thank you very much, Brett. It was
thank you. Be well. Be well.
Yeah, take care. Okay. So anyway, guys, all the information's here, and just note that this is temporary because soon you will be able to get Rhythmic from our website, right? So I know you have to get all these kind of things a little bit separately at the moment to run through some hoops, but you can get it if you want it. All right. So use this guide here, and then also that article, and all the information is in here. Okay. So if you reach out to us at support@bookmap.com, they're going to probably just send you this PDF. All right, and the link to the article, because this is the process to go through. Anyway, let me turn it back over to Scott and just go over any more kind of information that you wanted to kind of follow up with, Scott. So hold on.
Do you? I mean, I can answer any questions if you have time. I mean, I'm fine with time.
Okay.
But do you have the list of? Oh, you gave me back your screen. But do you have the list with my information, like the website and all that?
Oh yeah, I've been putting it into the chat probably about 4 or 5 times throughout this webinar.
Oh, okay. I just didn't see it in the handout thing. I thought that's.
Oh, that's not in the handouts. It's actually in the chat. So
Okay.
yeah, look into the chat. All the links are there. Scott's email is there, as well as his website, etc. So.
Oh yeah, I see it. Awesome.
So yeah, any specific questions regarding his trading style? I mean, Scott does mentoring, so you can just reach out to him directly. Okay, guys, let me take a quick look here if there's one maybe parting question or anything that you want to go over, Scott.
No, I mean I've gone over pretty much. Obviously it was fast, but I went over everything I wanted to go over.
Okay.
So, I mean, I can answer any questions or try to.
Okay.
For the next few minutes.
Okay. Let's see.
I guess I could be looking at it too. Keep forgetting I have the access to the chat here.
Yeah, no, I mean, just I think we've pretty much gone over everything. I think we've want to respect your time as well. This is an hour and a half now. It will be recorded. I put the recording link in there as well. Guys, again, like this will only work with, you need a combination. It's in the PDF, this combination of things. First, you need to subscribe to Bookmap. Second, you need to subscribe to Rhythmic Data for Futures and connect Bookmap directly to Rhythmic. It won't work through NinjaTrader. Ninja is going to strip out the MBO data, okay? Because the data first comes into Ninja, and then it is outputted to Bookmap, and they're not going to read that MBO data. So there's no benefit at all until they read that MBO data and output it. Okay, so you'll have to connect directly to Rhythmic, right? And again, it's only for CME. Okay, so those are the three things that are required. Well, and then the subscription to the MBO bundle. There's more in that MBO bundle. There's you're getting 3 indicators actually, and I haven't covered any of the other ones, right? So I just wanted to mention that. I think that's it. Yeah, excellent example, Scott. I love the way that you're using this and looking for that confirmation at specific levels. You already had it, and now you're just with a level of surety that is just enhanced with transparency here in the marketplace.
Right, absolutely. I mean, again, I know there might be some latecomers that didn't hear the beginning of the conversation, but like you say in your handout, I mean, they're 100% accuracy as far as the order types that are coming in, because those are labeled a certain way based on stops and icebergs. So it's not just some guess that these are icebergs or these are stops. Like that's what is happening, which is just incredible information.
Yeah. I mean, and that's our future now. I mean, that's or our present, and that's what we're getting now as retail traders, which is amazing. So we now have access to that, guys. Anyway, let's wrap it up. Thank you for coming, everybody. Thank you very much, Scott. I think it was a fantastic idea of getting you and Dr. Brett together for this webinar, and I'm going to try to rally or get another one going here in the near future sometime if we can.
Absolutely.
Okay.
Just let me know.
Okay. All right, guys. Thank you very much. We'll wrap it up, and we will continue another time. Okay. All right. Thanks, guys.
Thanks.
All right.
Appreciate
Thanks,
it.
Scott.
Thanks.
Bye-bye.